Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. This is the monthly edition. We are recording here on May 13th, Friday the 13th. Let's hope doesn't bring us bad luck for the remainder of the month. Hey, Barry, how you doing? My name's Ben Maldonado. I'm here with Barry Hatarachi. How are you, Barry?
Doing pretty good for the 13th.
Yeah, it is the 13th of the month, and we're a little late getting to this, but everybody knows the month of May has been really active and really busy. So we apologize for that, but we're doing a review of the latest monthly bar that closed. Plus, we get an added bonus since we're late this month. We see what half of May looks like as well.
Mm-hmm.
We're going to start off with Bitcoin, and thank goodness we got this new bar, which is May, showing what we fully expected when we kept getting stuck below the half square here, which was, listen, we're going to go down and we're going to test this full square. Not only have we tested it, we've gone through it. Price right now is just under it, so it's going to be really interesting to see where they close this monthly bar. If we close under this full square, and we'll call that like right around 31,000, that's the line that opens up another full square lower if we close under that. So the May close is going to be really, really critical. Even without that, you can see coming into here, we've been bearish. We topped out on this square, pulled back, and then for 4 months, we've been trying to get above this half square and are just been unable to do it. So the bearish tilt remains. The big point is we're going to go again, call this 31,000, a close under there, and we open up, definitely the half square at about 17.5 and possibly the full square at around 5,000. Could be a round tripper here. What do you think, Barry?
I'm on board.
Yeah. It's critical close for May in that 31 area. So
we talked about that other prior low getting taken out, which it has done now. So
yep.
It's in,
And we took out these lows here.
Yeah, those are the ones.
Mm-hmm. So. In addition to this little low here.
Mm-hmm.
So it's not looking bullish for Bitcoin. If it holds above 31,000, there's some hope that we could sort of build again up into this square. So the monthly close will tell us a lot. Let's check out NQ. Again, another bearish sort of signal for risk assets. NQs and Bitcoin have been tracking really well. That's why we like to watch both of them, see if there's ever a divergence that can give us a heads up to something changing. Right now, they're both bearish. We made the high, perfect price and time here late last year. We've come down and we tested the bottom of this full square for 3 straight months. You can see how it was really trying to hold, and then pushing up to see if we could get above the half square, call it like 14.9, 15,000 area. And it just failed. And now we've pushed through the full square. And interesting, if we get a test, which at some point we will, back to this 13,000 level, if we get stuck under there, the full square is opened up. So things are still bearish on a monthly perspective. Again, if we get stuck in this square and then get below the half square, you're looking at 9,400, 9,500 NASDAQ on the NQs. Any other comments you got on the NQs?
Well, I think it's time to watch the rallies, especially up against the key levels like that full square, and maybe an 8. I like that monthly high. That looks like a good resistance area.
Yeah.
Little bit above the full square. So between the full square and that high of the bar, that 1/8 line, I think that's a key zone to watch for the market to stall on pullbacks.
Mhm. So NQs are looking bearish. Let's
Mhm.
check out ES on a monthly basis. Kind of a similar picture. This one really captures it nicely. From the depths of the '09 low, we set the square, and look where the high came in. Price and time.
Mhm.
Really nice, really nice. 51 size of square was 51. Came in nicely, pushed above a couple times. With the weakness we've seen in May, we pushed a little below on an eighth, but so far the full square is holding. So the key level here to be watching, no surprise, right around 39.50.
Mhm.
A monthly close below that, and we open up the full square here. The pressure at first would be heading down towards around 3,500. And then if we lose that area, you're looking at the full square, which is around 3,200. So this close on a monthly basis, 39.48, 39.50, really, really important. And you can see so far, yesterday with the plunge, we went through it, but we've come right back above it. So the bulls obviously are aware of the significance there.
Mhm.
Anything else to add on the ES? I know you covered the weekly.
Well, I think it's a line that we've been laughing about for months, and that's that super vertical climb that we had.
Yeah, it's gone.
And I remember talking about this, say, wait till that breaks, all hell's going to break loose. And here we are. Let us not forget. So I guess we're in for some rough weather now.
I think so. Yep. Volatility is going to be here for a while.
Yep.
This is probably the most
we're definitely carrying the Friday the 13th vibe
here. This is probably the most interesting chart we'll see today on a monthly basis. And the reason being is it's got a 40-year trend line on a monthly basis. We hit that this month.
Mm-hmm.
And we've bounced pretty hard off of it, right? Like about 4 or 5 points in the bonds. Yeah. So do I think, this is it, the bear market in bonds is over? Absolutely not. This high here came in perfect on timing and at the half square. And look at the reaction we've gotten off of it. Mm-hmm. Do I think we're going to get some sort of retrace and some sort of pullback? Absolutely. But the bear market in bonds is in full swing. And when this goes, again, you've just violated a 40-year uptrend line when that happens. So it's super significant. In the meanwhile, any bounces that stay below this half square, which is call it 147 and a half, it's bearish. Could check back and then just start again.
Right.
Right now, the target, based on the fact that we lost that half square, is around 126 on a monthly basis. So bonds are in a weak position. Yes, we've bounced and have a reprieve here short term off of this trend line. But my take is bonds are still very, very bearish, and this represented possibly the end of this 40-year bull market in bonds. Where are you on the bonds?
I'm right there with you.
Yeah.
Yeah.
Anything else you want to point out on the chart?
Well, I think all of these that are trending lower, I think the key thing to watch now is to look at the retracements. And, if you guys haven't seen, and we cover these every week, we have a weekend Saturday show that we do and publish on Saturday. So if you watch the weekly, we'll be able to point out the levels on a shorter time frame, like daily and 4 hours. So I think it's really important to watch the retracements from here, counter trends going forward.
Yeah, and I didn't do the preamble because we've done this show so many times, but the monthlies are the bigger picture view, right? It gives you the 10,000 foot view of where's the major trend. of a market. On a weekly basis, we sort of do something a little more tactical where we're saying, hey, this market's in a good position. These are the levels. If it does this, this is what we can expect in the coming weeks. These are more bigger picture sort of, bull bear long term. So that's the flavor we try to give you. And it's a really useful effort because sometimes you can get caught up in the 5-minute, 30-minute, hourly, 4-hour, even the daily, and you're missing what the bigger move that's happening is.
Mm-hmm.
And so the monthlies, keep us grounded in that perspective. All right, first group we're going to check on commodity side is the grains. Let's see where the grains are. So here we got wheat. Wheat's been one of the monsters for us the last couple of years. And like a lot of the commodities, which we did pick up on our weekly show several months ago, hey, these things look like they're slowing down, look like they're consolidating, look like they're correcting. The grains are no different. They're on the shorter time frames, they really are in consolidation mode. You can see here from a monthly basis, and this is the pattern you'll see with all except for one of the markets on the commodity side we're going to cover. You had a high, whether it was 08 or 2011 or prior, big pullback, and then a long base and a breakout. So this is the pattern that you're going to see in all of them. We've had this in wheat, and now wheat's been sort of consolidating and correcting, and that's continuing all within this half square. We had this spike on the initial war in Russia announcement. Notice how the full square stopped it, caught the high. Also, we did a little false break with this high, which was a devilish move to everybody that was chasing. And then since then, for the last two and a half months, we've been really basing in this lower sort of half square of this highest square that the price has made it to. And that's we call it the 1200 to around 1050 range. And so do I think we're ready to take off for another huge move? Probably not. We probably got to burn some more time off, and maybe it's going to bounce, in this 200 point range for another month or two before we get the next leg up. For anybody that does waves, you can kind of look, this looks like maybe a third wave, and we're entering a fourth, which is, going to go up and down, but actually make no progress. So I wouldn't be surprised if we do that, as long as we're sitting on top of this full square in that 1050 area. It's really, really bullish. I mean, we would be above all the price action of the last 12, 13 years, except for this, 2-month spike. Anything else to add on wheat, Barry?
Well, it's just, I think you covered it pretty well. It's just the idea of, if it's about trading and it's about timing and it's really about picking, the end of the consolidations and waiting for your systems to signal the next leg. So here we've had a bit of a consolidation and so in the bigger picture, everything's obviously bullish. It's just a matter of timing on the shorter time.
Exactly. Using the shorter time frame to tell us when the next leg up is going to be, because you've got this bullish sort of setup and bullish sort of bigger picture view from the monthly. And again, that's a theme we see with almost all of these commodities. Here's corn. Similar picture, slightly different pattern, but same type of arrangement. And here in corn, we've really been tightly hanging around the highs. The ranges, you had a 200 point range there on wheat. And here you've been fairly tight, but again, sticking above this full square, call it in 779, 780 area, which as you look left is where the area of all the highs were 2008, 2011, 2012. So it's using those lower time frames again to say, okay, when is the consolidation over, and when are we going to start moving higher on the next leg? Corn could actually come all the way down to this previous high in 2021, which is around 735, and still be structurally bullish. So corn looks bullish. I don't see any problems here. It's simply a matter of identifying, when this consolidation / correction is over and the next leg starts. Anything to add on corn?
No, but in as far as long-term charts go, just to share this, the previous month's high and low is really important to watch. Mm-hmm. And also the 50% of that last month's range usually comes up handy when you're trying to get positioned. So just something to throw out there.
Yeah, those are really good to look at. And a lot of these you'll see, just like corn, it's inside the previous month, so we're consolidating, we're coiling, we're, whatever you want to call it, triangulating, which is what markets do. If they're bullish, they do it near the highs, which is what these are doing.
Right.
Here's soybeans. Again, very similar looking pattern to that of wheat and that of corn. Had a base, broke out, pulled back, went up to new highs, and now there's 3 months for you, Barry, of inside bars. After this one big up bar early in the year.
Yeah.
So it's coiling at the highs, but again, sitting on top of the square, sitting up near where previous, past cycle highs were, and it's not pulling back. I mean, the thing to notice too about these previous cycle highs, because you say, well, they spiked to the same area and then came down, but look how fast they came down off of it.
Exactly.
They didn't do this. They didn't go sideways. It was made the high, next bar down, made the high, next bar down.
Yeah, this is very bullish.
It's different. It's different than previous highs. So it's one of the reasons why we're bullish. All right, let's jump to the softs. One of my favorite in the softs group is sugar. And from the monthly perspective, you can see why. We made a sharp move up off of the half square, false break at the low. This is another thing to watch when you're looking at these monthly charts and these big pictures. A lot of the major moves start with a false break. Whether it's a false break at the high like this or a false break at the low like this one. It a lot of times it's the kickoff for a major move in the opposite direction. Here we have this strong move up, and for the last 7, 8, 9 months we've been consolidating. Although I think in a bullish manner, because we're getting these higher lows on a monthly basis. I like sugar. I think this 1850, 1860 area is super important. As long as we can hold that, sugar could take off at any time based on the bullish monthly charts, as well as when we look at the shorter term charts. So I like sugar a lot. Where are you on this one, Barry? I can't hear you, Barry.
Yeah, I was going to say I'm right there with you, and I think that monthly triangle is going to be something when it breaks out.
Yeah, powerful move coming out of there.
But it might take a couple more.
It could. Absolutely. It's doing its best to frustrate everybody because it's just staying in the range right now.
Mm-hmm.
Here's another one that's been a monster this year, and that's cotton. That same pattern, previous spike, basing, breakout, and then it's going to different levels, right? When here, notice this, because this I think is a good example of what we're looking for in a lot of these. Big move up, gets stuck on the full square, goes sideways for 4 or 5 months, breakout, heads up to the next square. So is a consolidation sideways again for 3, 4, 5 months likely here or possible here? Absolutely. It's a bullish market. It's moving level to level. It's taking out the levels where it needs to. by consolidating, not having a sharp pullback. When you see this type of action over here, spike high, spike right off of it, that's when you got to be wary. That's when it's game over, right? Something has changed. But here, when we hit the levels, we're just going sideways, and then next leg up. So we probably got another sideways here before cotton goes again. But again, it's a bullish market. Any other observations on cotton?
Well, again, another waiting game, right? It's, I think cotton's just. We had that other. Remember when the first triangle broke out?
Yep.
That was the first the big impulse. So again, I think we might have to go through this. We're closing. We reversed for the month, so it looks like we tested that square and probably consolidate a little bit. Again, looks like a pretty tight consolidation so far, and it's just a matter of buying time.
That's it. Absolutely. That is the key. Patience with these waiting for the next move is the key. This is the black sheep of the commodity family right now. And the reason I say that is it hasn't had the powerful move and the breakout. It's just been in this sideways chop for decades. But the one thing why I keep watching it and why I keep it on the list and why I do the work is we keep tightening up in this winding up triangle. So the break out of here is going to be monstrous. This is a 5, 6, 7 year triangle. And notice how as we've come down and progressed through the triangle, it's getting tighter and tighter and tighter. We're trying to use the lower time frames to keep us sort of in the game and ready for when the break comes, and we'll be sure and let everybody know on the weekly shows. But on a bigger picture view, this is one that's just winding up. I know you've been in and out of this one and trying to trade it. Any other advice or observations you have for cocoa?
Well, like all the commodities, and they're all sort of consolidating at the moment, and this has been, it's been like you said, it's been a long compression. So it's just a matter of waiting, and it's going to be worth the wait, and it's not going to be over in 1 day or 1 week or 1 month. So it'll be worth trading. We're just kind of sort of watching for now.
An interesting thing is, look, here was a really tight consolidation that was 3 or 4 years in the making. And then look at the move you got out of it.
Right.
You went basically almost, what was it, 1, 2, 3 squares. So if we get a move out of here, let's just say it's an equal type move, and we get 3 squares. You're looking 5,000, 6,000 in cocoa.
Yep.
It would be a big move. So we'll see. Hopefully we catch it.
Right.
Coffee. So here's coffee. Now, coffee's an interesting one too, because we're currently dancing with and playing around with really important support here on the full square. It's bullish, and they're pushing, after we, made this rush up to try and make a new high and capture this half square. It got rejected, and we came right back down to the full square, and we've been battling in this month of May with the full square. So longer term, it's bullish. Holding this area makes it super bullish. So we're watching closely the price action in coffee on a shorter time frames, because if we hold in this 210 to 212 area, call it, coffee really looks bullish, and it could be the correction is over and it's ready to launch. After the last sort of 3 months of the pullback. I know you've been all over coffee, Barry. Where are you looking here at this chart?
Well, I'm actually looking to see if this pullback would be. It's a nice 3-month kind of a pullback, and once it gets cleared above that square, I mean, I'm also looking at shorter term squares and levels. This could be a good place. So I'm watching the dailies. The only thing is, again, like all the other commodities, it's a matter of nailing that next lift off.
Right, the beginning of that next leg.
Exactly.
Yeah.
So, and since we're way up here already and kind of in the consolidation, we give it a little bit extra time to set up, to sort of prove it. But I'm just watching for now.
And we'll keep you alert on the weekly shows as, when coffee's, we think coffee's ready to go, and we'll bring it to your attention like we always do with all the other commodities.
And coffee is a big contract, so you can't just mess around with it.
No, it hurts when you're wrong. That's sure.
That's right. So you have to be very precise.
Are you ready to jump over and look at the metals?
Yep, let's do it.
So here we have the metals. Let's check out gold. The gold monthly. Gold has been frustrating everybody, right? And it feels to me like we're at the point where people are ready to give up on gold, which is probably when you should be buying it, especially when it's got a bullish pattern like this.
Right on the trend line there.
Yeah, the low today is on this trend line, and that's a monthly trend line going back to early 2020. So I think gold is bullish. I have been bullish on gold. Am I frustrated like everybody else that we've been, sort of stuck in this consolidation? I was bullish in here. I thought, okay, we've got the turn in here, and we did get a turn, but now we're pulling back again. I mean, it's all just setting up for the big move higher. Because again, look at where price is compared to the previous highs. Just checking them, right? Coming back, checking them. Saying, hey, let me give you a little kiss goodbye before we head higher. I mean, that's what it looks like to me. On the monthlies, the big level is this, 925, 930, a close above that, and we've opened up the next square. So I'm bullish gold. I know you are too, Barry. Anything to add to the chart?
Well, just that. Well, there's no way to be not bullish for the foreseeable future. So I think you just have to, like everything else, you have to get through the consolidation. And, being bullish is one thing. And when the market will move in that direction is another thing. So these are bullish consolidations. We're not in a gold's not in a bear market. So when we say we're bullish, we're looking to trade in that direction, right?
Exactly.
And just waiting for the market to move. It doesn't really, market doesn't take the cues off of us. So we have to.
Unfortunately.
But it will get going. And so this is, it depends where you are, in the gold, what you do to trade gold. If it's just adding gold to your positions long term, then any kind of monthly pullback like this is fair game. You can do it like we do for stocks. Dollar cost averaging, is it?
That's right. That's right.
And you can do that because we know gold is, headed higher because of the cycle. So far everything looks good. It's just a matter of being patient.
Yeah. The last thing I'll add is when you have a 2-year consolidation, which is what we're going on. If this, is still consolidating into July, August, that'll be a 2-year consolidation. There's a lot of energy built up for when the breakout does occur.
Right.
So it should be a good one. Here's silver. Little different picture than gold, but no less bullish. The last few months we've been talking about how the lows have been holding this full square in the sort of 2090, 2095 area, and sitting on top of this entire consolidation. We're just testing it right now. But again, to me, this is a bullish consolidation, multi-month, almost going on multi-year correction that really just went sideways, between the half square here and the full square on the bottom. So this, I believe, is winding up and ready to go. And the interesting thing from a wave perspective, right? We had this false break that took out the lows and sort of set off this first move higher. So if this is your first move, and then here we've got the consolidation, potentially you've got a fast moving third wave higher to come on a monthly basis. And that would be this kind of move over here, a 1, 2, and then there's your 3. So that, I believe, is the potential for silvers to have this kind of move coming out of this consolidation. But we'll see. The market will tell us. Anything to add on silver?
Oh, that's good. I think we're good.
Silver looks good.
Matter of fact, it's textbook like good.
Yeah.
As far as the pullback goes. So
just requires patience, right? You gotta wait for the setup to where you get the signals that the next wave higher has begun. But it's coming. Last metal we'll look at is copper. Really been volatile, and it's interesting in that a lot of people talking about the death of copper and the economy, it's going to take copper down in China. But look at all we're doing. Super wide range, but essentially we're just sort of fibrillating around this full square area, which also happens to be the area of previous highs. On a bigger picture view, copper does not look bearish, at least to me. Where would I say, hey, we got to look out, we got to watch out for copper? For me, it's if you lose this full square, and then it becomes a problem. The warning sign would be as if we lost the half square here, which is in the, call it 380 range. But as long as we're above 380, in my book, copper's bullish. I know copper has a lot of people worried because it's economically sensitive. What is the chart telling you?
Well, looking at that move and the false break, it looks like it's lower to go, only because it's false break. And so I think a test of that half square is probably definitely in order, looks like, at least. And I think if we can hold, my take is the half square would be a key level. If we can hold above that, we're in good shape.
Absolutely.
And if we take that out in some way, like you said, to go back and test the full square, then I think it's a longer, many months to
Agreed.
recover off of that. So that half square to me is really important.
And there's some timing here. We were discussing this earlier. July is showing an important timing on copper.
Mm-hmm.
So that's coming up this summer. Maybe we resolve this consolidation and we get a break either way to be able to play.
Right.
Last, let's check the energy stocks or energy commodities here. Crude. To me right now, crude is the most bullish commodity out there in terms of the setup. On the monthly, you can see we had this major downtrend line coming off the 2008 highs. We had this spike low into COVID, which sure looks like a false break in retrospect, doesn't it?
Yep.
And then we had this fast move higher, and now we've been sort of consolidating, and you can really see the consolidation, if you look at a daily or a shorter term chart. But in this consolidation, again, we're when a commodity is done, it's this kind of move out of the high, right? It's unrelenting, right? Bam, 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 bam. It's not this. It's not inside bars. It's not sideways price action. So this tells me that, maybe we chop around a little bit more, but there's another leg probabilities favor. There's another leg coming up in crude. And that's where I am on crude. Where are you, Barry?
I'm long. That's where I am.
Well, there you go. There's no stronger vote than when you're voting with your money.
Right. Well, basically, it's what else are you going to do? What are you going to short the thing, right? So I think, well, we cover this thoroughly every week. So I remember what was the last, we were around 95, 97, and that was the key support. We were looking for price to get above that. So now we're back and, we're looking for run up into like at least 135 on this leg. Mm-hmm. If we break out, I know we've been watching that triangle on the daily basis. So we're waiting for a break of that. And if it breaks it, then I think we can have a nice move.
Monthly basis, like 114 is a key level monthly basis.
Right.
Close above that means we've captured this full square. And now we've opened up, 140 at the top of the next square. Mm-hmm. So we're watching crude, very bullish on crude, favorite commodity chart out there right now. Lastly, let's look at our old friend, natural gas. This thing is amazing to trade when you get it right because it moves. It does not sit around.
It's a fast mover, man.
It goes, and it goes further than you think is possible. Yeah. So anyway, the bullish, we were talking about this, 3, 4, 5 months ago, how this pullback was very bullish because it pulled right back after this initial move up, pulled right back to the half square, and there's your launch.
Right.
Once again, if it was done, you see these kind of moves out of highs. Here we're just kind of, sloshing back and forth right around the half square, which is about 770. Again, we had another spike up. I think we hit 9 at the high here. Yeah, it was 9 was the high. Now we've pulled back. We're probably going to consolidate again, maybe even have it, pull back and test the full square. But anywhere in here, it's bullish. Because look, even if it pulls back to the full square, which is about 580, 576, 580, 575, you're sitting on these highs, above all this consolidation. So I'm still bullish on natural gas, aware of the fact that, we just had this latest leg up. So we're probably going to see, 2-3 month pause again, or some sort of consolidation before we can get the next leg up. But there's nothing bearish about this market. Any other thoughts?
Well, just that, just be ready for higher volatility. As these things go higher, all commodities, all things actually, the volatility increases as a byproduct. So you just have to keep accounting for those things as we trade at higher and higher levels. Mm-hmm. Yeah, that's all.
Yeah, that's good advice. I mean, overall, the big picture, just to summarize, the risk markets, if you're looking at Bitcoin, NQs, ES, their bigger picture is down, right? The weight of the evidence and the tide has turned in those markets, and it's kind of a risk off mode there. Bonds is the same, believe it or not. Usually bonds are a hedge for equities. They're not. Right now, they're also, from a bigger picture, poised to go lower. And the commodities, while most of them, almost all of them right now, are in some sort of consolidation or correction phase, on a longer term, bigger picture basis, the bull markets in them are still alive. So we're still focusing on identifying, when are the consolidations, when are the corrections ending, and can we use the shorter time frames to figure out when the next leg up is going. So as long as the charts are telling us that, and as long as the big picture is supporting that, that's the optimal strategy there. So I love doing these monthly shows because it always, gives me that different perspective. I hope you guys get a lot out of them, and we'll talk to you in a couple days when we do the next weekly show. Thanks, Barry.
Thanks, Ben. Good job. Nice coverage. So,
All right. Thank you.
All right. You guys have a good month, and we'll talk soon.
Take care.
Bye-bye.